Frontline stocks are steady after an early dip, even though the broader market sees some weakness after a dip in US equities on Friday. FMCG and financial stocks eke out gains while energy and metals are the big drags. The 6,560 crore rupees public offer of Bajaj Housing Finance opens for subscription today. The company is looking to raise 3,560 crore via a fresh issue of shares, while the offer for sale is for 3,000 crore rupees. The lender's anchor book has drawn strong response from leading foreign and domestic institutional investors. Hindustan Unilever has constituted an independent committee to chart the future of its ice cream business after parent Unilever's decision to spin off its own ice cream vertical by 2025. A sweet goodbye may be on the cards. There's lots on the plate of the GST Council today. Prominent on the list is a review of the GST levy on life and health insurance, a proposal to impose GST on payment gateways, the need for GST relief to give realty and a fillip, and taking stock of the compensation cess. Hello and welcome to Business Lunch here on CNBC-TV18 in the Mumbai News Centre. I'm Horvus Vatakia. Let's first take a look at how the markets are faring this afternoon. It's been a recovery from the lows, at least for the benchmark indices, and since then the indices have been fairly stable, almost on even keel. Around the flat line is where the Nifty lies, around those levels of 24,850, 24,900 is where the Nifty continues to trade, and that recovery has largely been led by the financial names. The Nifty Bank was the one that was the outperformer, but even that index is now continuing to trade around the flat line off the highs of the day, and that too, there you can see the off the highs of the day, 100 points higher on the Nifty Bank, and that is ensuring that the Nifty remains in the green. But the pain though is coming in the broader markets. Both the mid-cap and the small-cap indices are seeing selling pressure in today's session. The mid-cap index is down 0.7%. The small-cap index though is the top sectoral loser, down 1.5%. As we speak, there is also selling pressure coming in from the PSU space, the Nifty PSE index. Now, all 20 constituents of the Nifty PSE index are currently trading with losses at the lowest point of the day, now over 2% down for the PSE index. REC PFC, they're leading the losses, but bucking the trend though in today's session are FMCG stocks, and they are being led by Hindustan Unilever, and the FMCG index is up almost 1.5% as we speak. There you can see at the high point of the day is the Nifty FMCG index led by Hindustan Unilever, 3% higher now at the highest point of the day. But there is a lot to focus on today. Prominent among that is the GST Council meet that is underway to deliberate on a number of crucial issues, from taxing gateway fees for small card transactions to deliberating on tax treatment for insurance premiums. The council has its plates full. Timsy Jaipuria, who's been bringing us the updates on the GST Council's likely agenda over the past few days, is here with the details. Timsy, is there anything that you're hearing from the council meeting as of now?
Well, as of now, my sources say that there's a lot on the plate, so the discussions are taking a lot of time. And as you rightly mentioned, some of the key agenda items that we must watch out for includes whether the council decides to give an exemption or a relief on the health insurance premiums and life insurance premium. Here the proposal is to exempt premium on pure term life insurance from 18% to 0, which would mean a revenue outgo of 213 crore rupees. And there are 4 options given on the health insurance side, whether to exempt all, or only for senior citizens, or only for policies up to 5 lakh rupees, or when it comes to only group, etc. So over here there are options that have been given. Fitment committee and officers could not decide, and they have now left it open for the council to take a discussion and decide upon. Apart from that, other proposals include to levy 18% GST, that is in terms of a clarification, 18% GST on payment aggregators or payment gateways which are used during a digital transaction below 2,000 rupees via payments made via cards, etc. If approved, this could be a big dent on payment aggregators, 18% GST on the fees that they earn by getting this transaction concluded. Here, Fitment Committee is of a view that payment aggregators are not financial institutions or banks, thus they were never exempted from this particular GST. Opposition has come out saying that this could impact people. It is against Digital India mission. No payment aggregator is going to absorb it. Opposition says it will be passed on to consumers, thus it should not be taken ahead. Let's see what council decides on it, but yes, opposition has come out saying so. Apart from that, also proposal to levy 18% GST on oil and gas exploration, on farm-in, farm-out contracts. Simply put, this means on subcontracting or giving away the contract after winning to another person, another party over here. This is in terms of clarification. If allowed, this would mean 18% GST with ITC. This is having a potential heavy outgo on these companies, but yes, a revenue plus for the government could be possible if this goes through. Then proposal to clarify on taxation of highway builders when awarded a contract on TOT model. If clarified, 18% GST will apply. Remember here DGGI had sent notices worth 670 crore rupees, so that could be coming in. For FMCG sector on namkeen and extrusion based namkeens here, if clarified, big relief could come in for players like ITC, PepsiCo, etc., where DGGI notices have gone on treatment of namkeen and fryams. Here Fitment Committee has proposed that for the past, that is in the retrospective, 18% should be applicable on extrusion based and other namkeens should be 12%, and on prospectively it should be only 12%. Another on the agenda is much awaited review of online gaming casinos. Compensation cess review, 1.37 lakh crore rupees shortfall, so compensation cess could continue for FY26. And yes, many more items, whether it is for two-wheeler and auto car seats, whether it is for cancer drugs, whether it is for getting in details on the film producers, on the film production, that could be a relief. Then power company, discoms and consumers on electricity connection could get a relief. Then metal sector.
There is definitely a lot on the agenda to track, but thanks a lot for those updates. There is a lot indeed on the plate of the GST Council, as Timsy was highlighting. But moving on to action in the primary markets, and there is a lot of action there. Bajaj Housing Finance is one of the IPOs that has opened for subscription today. The 6560 crore rupee issue that includes an offer for sale of 3000 crore and a fresh issue of 3560 crore rupees. The company has also raised around 1750 crore rupees via the anchor book ahead of the IPO. To discuss their IPO offering, we had spoken to Atul Jain, the managing director of the company, who said he believes there is a clear highway of growth for the company going forward. Listen into that.
What we have been growing at the rate of, in last 3 years, at the rate of a 31% AUM. Past growth is not a reflection for the future growth. But the housing market, as you called out, is very big. The market is very big, and compared to while our absolute size, which is a 91,000 crore assets as of 31st March and a 97,000 crore assets as of a 30th of June, look in absolute sense reasonably big, but compared to the market size, I think we are still very small. I think all sectors, all segments of the market have a clear runway and a very large runway, given country is growing, given housing demand is growing, given mortgage segment itself has been growing at the rate of a 12 to 15% across industry. So we believe, given our relative size, we have a reasonable path and a highway to grow.
Bajaj Housing Finance, one of the 3 IPOs that have opened for subscription today. Now, Road Transport Minister Nitin Gadkari says that the government's focus is on pollution-free and cost-effective cars. Now, speaking at the 64th Annual Automotive Component Manufacturers Session, the minister added that he is not against additional subsidies for the electric vehicle sector. Listen into what he had to say.
I am not against petrol and diesel or fossil fuel. Sometimes unnecessary my statement is misinterpreted in the media. Import substitute cost-effective, pollution-free and indigenous. We have got the import of 22 lakh crore for fossil fuel. It's really a $1 million question to all of you, that in our own country we need to make the import of 22 lakh crore is not a challenge for the country. This is the time that you have to change as far as the market is changing. You have to change as far as the choice of the people is changing. And in the interest of the nation, the society, economic point of view and pollution point of view, government, it is our duty to implement that policy. I am not against any incentives. Actually, the heavy industries minister is responsible. If you want to give more incentives on e-vehicle, I don't have any problem. What I was given my argument from my side, that when the e-vehicle starts, the cost of the vehicle, suppose is X. But now at that time, the price of the lithium-ion battery was $150 per kilowatt per hour. Now it is something 108 to 110 kilowatt per hour. I am confident it will come $100. So Actually, my feeling was because the number also, manufacturing number is also increased. So on the basis of that, my assessment was that without subsidy, you can maintain that cost because the cost of production is less.
Well, time for a short break here on Business Lunch. Up next, we get your roundup of the weaker than expected August jobs data from the United States. Stay tuned. Back on the other side. Welcome back. Now, the US economy added fewer than expected jobs in the month of August at 142,000 versus the expected gain of 161,000. CNBC's Steve Leisman has a roundup of the data and what could it mean for the Federal Reserve's next move.
I'm calling this a mixed jobs report that is leading to mixed views about what it means for the Fed and the economic outlook. On balance, and it is a close call here, the street taking this as a report that leans more towards the soft landing camp than the hard landing and recession one. Here are the numbers real quick. 142 below the 161 estimate. 4.2 on the unemployment rate, down a tick. Average hourly wages, though, pretty healthy, speaking to a reasonably healthy jobs market if those wages are that high, up to 3.8% on the year over year. Maybe important part there is it's beating inflation, so you have real wage gains, and you've had those for quite some time now. A big part of the story, minus 86K on the downward revisions to June and July payrolls. That's part of a series of big downward revisions from the BLS. And sometimes these downward revisions tell us which way things are going. That would mean further weakness ahead. Where the jobs were, leisure and hospitality, it's been where the jobs have been. It's where they were in August. Healthcare, social assistance, those two. Those are the main ones. And then you have government not shown there, up 24,000. Construction also doing well. A big part of that, especially trade contractors. Retail down 11, manufacturing down 24,000. Here's how we're set up for the Fed in the wake of this number. Briefly, the market priced in a 50, and then it said, maybe not, and went back to pricing in essentially a 25 for September with a 63% probability, back to pricing in a 50 for November at 94%, and then up and down, on and off with a 50 or 25 in December, just barely at 52%. Bottom line is the market's sticking to this idea of 100 basis points between now and the end of the year. Here's some of the commentary that I've been reading about. Joe Biswella says it was a solid, if unspectacular, report. Morgan Stanley says it implies recession fears may have been overdone, but confirms slowing. PIMCO says it's consistent with an economy that is slowing but not crashing. This has been an expansion where skeptics outnumber believers and have done so from the beginning. What's clear is the job market is slowing. Revisions support the idea of a further slowdown, but so far, nothing in the data tells us it's more than a soft landing. But the Bears guys seem ready to stampede the Bulls at the drop of any piece of bad data.
Steve Leisman there with the jobs data on Friday that led to a massive sell-off in US equities. Moving on then, the real estate arm of IKEA, Inca Centres, plans to unveil its second major project in the Delhi NCR region called Likli Noida. Now, Sebastian Hilving, the global expansion director of Inca Centres, and Suzanne Pulverer, the CEO of IKEA India, spoke to Shivani Bajaj and revealed that India is among the top 3 markets for the company.
So today we have the unveiling ceremony. We have already gotten started, but today is the official start. And by 2028, we will open the doors to welcome all the visitors. And from an investment point of view, we're looking at 607 million euros. That's about 5,500 crores, to my understanding.
What we have learned is we have made very, very large stores, and they have almost been too big for the Indian consumer. So now we go down to a more decent size of still very big, 250 square feet in these two Likli centers. And I think that will also adjust much more from a range perspective, offer perspective, as I said, showing solutions even more integrated for the Indian consumers. And I'm hoping that this will be very good fit to the Indian market and to the Delhi NCR.
The top brass of IKEA in conversation with CNBC-TV18. Time for a short break. Up next, the Health Ministry says the suspected monkeypox case in India is under investigation. We get you more details on this story on the other side. Stay tuned. Welcome back to Business Lunch. Now, the Supreme Court hearing the RG Kaur rape and murder case has taken note of the status report filed by the CBI and the Kolkata police and has said it will not be appropriate to make public comments as it does not wish to influence the investigation. Taking note of the centre's claims that the accommodation and equipment is not being provided for the CISF soldiers at the hospital, the Apex Court also has directed the state government to provide accommodation and necessary security equipment by 9 p.m. tonight. The court will now hear the case again on the 17th of September. Well, India has reported its first suspected monkeypox case yesterday in the form of a male patient who travelled back to the country from a monkeypox-affected region. Ekta is here to tell us more about the case, the symptoms the disease presents and how it spreads. Ekta, over to you.
Thanks for that. Well, India on Sunday reported its first ever suspected case of monkeypox or Mpox involving a young male patient who recently travelled from a country experiencing Mpox transmission. The patient has been isolated and is currently in stable condition. Now, samples are being tested to confirm the presence of monkeypox, according to the Health Ministry. Now, according to the Health Ministry, there is no cause for undue concern. The case is being managed in line with established protocols and contact tracing is ongoing. The ministry has said that the country is fully prepared to deal with such isolated travel-related cases and has robust measures in place to manage and mitigate any potential risk. This development, remember, comes after the World Health Organization declared Mpox a public health emergency last month. Mpox caused by the monkeypox virus presents symptoms such as skin rash, fever, headache, muscle ache, and swollen lymph nodes. Transmission occurs through close contact with an infected person, contaminated materials, or infected animals.
Ekta, thanks a lot for that. Now, in fact, earlier today, we spoke to Dr. Nilesh Shah, who is the president of Metropolis Healthcare, to enlighten viewers on the current facilities available in India for running tests on the virus. He also explained how the virus gets transmitted. Listen in.
But on back-end side, the technology, the knowledge part, the technical training, validations, everything is complete and we are ready. We are awaiting government's go-ahead to run the test. Post-COVID, these labs could not sustain the setup because it requires that level of volumes and that variety of manpower sustainability and so on. And many of them shut down. But still, I believe that at least 400-500 labs still are doing molecular tests, and which is not bad to begin with. Must know first, what are the three areas from where the infection can occur? So one is direct contact. Second is respiratory droplets, which may come out from the patient. So don't go too close to the patient without mask. And third is contaminated material from the patient. These are the three things to be protected. Now, hence, the guideline today are to wear PPE kit. But you know, in COVID time also, it started with full-fledged PPE kit, and also it's not that severe, but PPE right now is recommended while doing the collection of sample.
The latest there on the monkeypox suspected case in the country. Now, a Deloitte report indicates that remunerations for CEOs of India's top companies have surged over 25% since last year, with the average CEO taking home a pay package of 27 crore rupees a year. Yusuf is here with the details of that report.
The average remuneration of top executives at Nifty 50 companies surged to 27 crore rupees in FY24, which is an increase of 26% from FY23. During the year, top executives of Nifty 50 companies drew a combined compensation of 1,347 crore rupees, showed data compiled from their annual reports. So who tops the list? Wipro's former CEO Thierry Delaporte is on top with an annual compensation of 168 crore rupees, which also includes severance-related costs. Two more CEOs were part of 100 crore club in FY24. Pawan Munjal of Hero MotoCorp earned over 109 crore rupees, and Rajiv Jain of Bajaj Finance earned more than 101 crore rupees. Just below the 100 crore club, CP Gurinani of Tech Mahindra, the promoters of Divi's Lab, and Chief Vijay Kumar of HC Tech. So the top 6 companies put together, they earned 641 crore rupees, which is almost 48% of the total remuneration put together. 3 more executives earned more than 50 crore rupees in FY24. Infosys CEO Salil Parekh got a remuneration of over 66 crore rupees. Rajiv Bajaj of Bajaj Auto saw his pay increase by 13% to nearly 54 crore rupees. S.N. Subramanian of L&T earned over 51 crore rupees. Among state-owned companies, only 2 executives received compensation more than 1 crore rupees. Gurdeep Singh of NTPC and Arun Singh of ONGC. The lowest remuneration among the PSUs was the chairman of India's largest bank, SBI, Dinesh Khara, who has now retired, received a compensation of 39 lakhs rupees in FY24. All in all, the average compensation of 27 crore rupees for Nifty 50 executives is higher than 21 crore rupees we saw in FY23. But it is below the FY22 average of 28 crore rupees, which remains the highest on record.
CEO salaries at your display. With that, it's a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.